Let me be brutally honest, property taxes might be the biggest scam running in plain sight in America. Think about it for a second. You grind for decades, you pay income taxes, you pay sales taxes, you buy a home, you pay off the loan, and you think, finally, I own this thing. But the moment you stop paying the county's yearly fee, they can snatch it back. How is that ownership? That isn't owning a home, that's being a lifelong renter with a 30-year down payment. And the kicker, those yearly payments are exploding across the country. But here's the part nobody at the assessor's office wants you to realize. Most of those numbers are guesses, not estimates, guesses. Realtor.com's 2025 analysis showed something insane. More than 40% of homes in America are overvalued on paper, meaning millions of people are literally overpaying because of a clerical error they've never questioned. Most folks complain, maybe tweet about it, then write the check anyway. But a small group of homeowners quietly beats the system every single year, using loopholes that exist right inside the tax code. No lawyers, no accounting degree, no fleeing to Montana to live off the grid. Just 3 shockingly effective methods that counties hope you never figure out. And here on TaxHack Pro, I'm going to walk you through all 3. The third method is the one that honestly frustrates me the most, because it's pure free money. It's the homestead exemption and senior freeze benefits you qualify for, simply by living in your home and being the right age. And the government is absolutely terrible at telling you about them. The LA County assessor admitted that nearly 1/3 of homeowners never apply for exemptions they're legally entitled to. That's tens of millions of dollars thrown away every single year. If you're 65 or older, and in some states as young as 55, you may qualify for what's called a circuit breaker, which freezes your valuation or caps your taxes permanently. In Texas, your school taxes freeze the day you turn 65. In Illinois, your assessment locks in. In California, you automatically get a $7,000 knockoff from the taxable value just for living there. This isn't a government handout. This is you reclaiming money you should have never lost in the first place. But you must file the form. If you don't, you're voluntarily tipping the government for bad service. And if none of these apply to you, no fear. Because the new changes from Trump's tax reform massively increased the SALT deduction cap from $10,000 to $40,000. Whether you like him or not, that change means millions of Americans can now deduct 4 times more of their property taxes on their federal return. Even if your county sticks it to you, the IRS might give a chunk of it back. Bottom line, the property tax system is built on one thing: people not fighting back. Counties depend on your silence. They count on you assuming nothing can be changed. But treating your home like a business, questioning every expense, challenging every number, is how you survive in 2025's economy. Because here's the truth. Property taxes are just one way wealth leaks out of your life. There are hidden liens, title issues, and insurance gaps draining your savings without you ever noticing. And that's exactly why I've linked the next video. For you, a 60-second home checkup that shows you the weak points in your property before they become expensive disasters. It's the same tool investors use before they buy a home. And every homeowner should use it too. Click it now and plug the leaks before they sink your financial future. Subscribe TaxHack Pro, and I'll see you in the next one. Asterisk. The first strategy is something the real estate insiders have been abusing for years. I call it the backyard ranch trick. When people hear agricultural exemption, they picture giant ranches, tractors, and some guy in a cowboy hat. Wrong. Developers discovered years ago that you don't need thousands of acres to qualify. Reporters at Sunco Searchlight even found more than 1,000 developer-owned LLCs taking advantage of what they nicknamed the rent-a-cow loophole. They let a cattle grazer use the land for a tiny slice of time, claim agricultural status, and legally slash their tax bill by massive amounts. But you don't need cattle. You don't even need grass. In states like Texas, Florida, and Colorado, all you need is to shift how your land is used. It's called wildlife management. If your property supports native wildlife, and yes, that includes putting up bird boxes or clearing brush, your taxable value can nosedive by up to 98%. Some homeowners use beekeeping. Yup, simply hosting to beehives. Can legally qualify your property as agricultural in certain counties. You hire a beekeeper to maintain the hives, spend a few $100, and save thousands. You get honey, bees get a home, the county gets nothing. A win-win-win. But maybe you live in a neighborhood with a tiny backyard. No problem. The second strategy is what I call the reality check method. Property assessors rely on software, massive spreadsheets full of averages. They see the flip down the street sell for a crazy high price and assume your home looks just like it. That's called sales chasing, and it's wildly inaccurate. The system doesn't know your roof is older than your dog. It doesn't know your kitchen cabinets survived the Reagan administration. It doesn't know your guest room looks like a crime scene of mismatched furniture. In appraisal language, this is called functional obsolescence, meaning the home technically works, but not the way modern buyers expect. Here's the part people don't realize. Even though only 3 to 5% of homeowners appeal their assessment, between 30% and 50% of them win, according to BankGrid. Those odds are better than Vegas. The trick: don't walk in complaining. Walk in with evidence. Pictures of the cracked driveway, the old windows, the 1970s tile, the outdated appliances, all the stuff you usually hide from guests. That is the stuff that saves you money. Your ugly features are tax weapons. The goal isn't to insult your home, it's to force the assessor to acknowledge that the algorithm overestimated your value. Once they see the real condition, they have to adjust.